Okay. Morning, everybody. This is Soham, and I will be taking you through a case study on supply chain management. Just a brief introduction about myself. I work as a global value chain manager with Petronas Lubricants. Been with the organization for over a year now, and prior to that, I've worked with various other organizations, mostly consulting firms like Deloitte and PwC, and also other industry firms, but all related to the area of supply chain. So you can see that supply chain is my area of passion, so as to say, and I thought that it would be a good opportunity to take some of you through what a typical supply chain case study looks like. I received some preliminary questions, and one of the first questions I received was, "What is a supply chain?" So what I will do is I will start off with a quick introduction of what exactly is a supply chain, and then we will proceed to understanding the elements that constitute a supply chain and how do we break down a case study focused on supply chain. So I'll play a quick video now.
Supply chain is made up of plan, source, make, and deliver. And everything you see in the store comes through our supply chain.
Starbucks is involved in the journey of the bean all the way from planting it in the coffee farm to brewing that perfect cup of coffee and delivering it to our customer.
I'm outrageously proud of the coffee that we make. You can't buy better coffee.
We are enabling that experience, that Starbucks experience, to happen.
Here at Starbucks, we make a lot of coffee.
Planning in our supply chain involves planning everything from raw materials through manufacturing to our retail markets.
The coffee department sources the best coffee in the world for us to then roast and package.
Starbucks has one of the most unique distribution channels with the number of daily deliveries as well as the multiple temperature requirements. That's complexity.
Our job here is to make sure that every coffee we get, all of the products we buy, we manufacture, we distribute, are ethically and environmentally responsible. Sustainability is about good business.
So Starbucks makes the coffee, but we also work with the manufacturers of the cups and the napkins.
Cocoa, tea.
The lunch, the dairy items.
Everything that you could possibly think of that's in a store.
Our deliver team makes it all happen.
Being creative, taking risks with new ideas is how you make your career.
What makes working at Starbucks so special to me is the sense of family and the passion for what we're doing. We're not making widgets. We're making the best coffee in the world.
Okay, so this was not meant to be an advertisement for Starbucks careers, but it was more to give you an understanding of how and what are the elements that constitute a supply chain. If you would have gone, if you would have seen the video, then some of the elements that will come to your mind are who are the parties involved in a supply chain. So it all starts with the customer. So the customer is the person who buys the product, and he gets it from a retail outlet, whether it's a Starbucks outlet or an Aeon or any of the retail outlets that you go to. Those retail outlets are serviced from certain warehouses. The warehouses are essentially places where you store all the materials, and then to store the materials you need to produce them. So there are manufacturing plants which also get their supplies from certain suppliers. So all these parties are involved in making a complete supply chain, right from sourcing of materials to delivering the goods to the customer. In terms of the processes involved, there is the whole delivery process. So we have goods moving from the factory all the way to the customer. And then there is a manufacturing unit which produces the goods. And there are suppliers that deliver or give the goods to the manufacturing plants. In terms of the other enabling activities, we have a planning process. So the planning process is essentially the area where we ensure that the supply chain is working fine, and then all the elements are interlinked together and there is seamless flow of information as well as goods. And then the planning sets the stage for the execution. So once there is a plan which is created for delivery, there's a plan created for manufacturing, and also a plan for sourcing. There are a different set of people who actually execute the plans based on the requirements of the organization. So there will be a delivery of materials from the suppliers to the manufacturing plants, from the plants to the warehouses, so on and so forth. So if you look at the whole supply chain, what are the three critical elements that constitute a supply chain? Cash. This is the most important element that any business focuses in. Whenever we are running a business, the primary focus is to generate profits, and hence it is always desired that we deliver goods or the supply chain performs in the most cost-effective way. Products. The most important function of a supply chain is to deliver the products at the right time, in the right quantity to the right customer. And time. These three elements are the most important elements of a supply chain. So before we move to a case study, I hope you have a brief overview of what a supply chain looks like. And now we will quickly delve into one of the case studies. Let's say it's a rainy, gloomy morning that you step into your office and you get called by your boss who is complaining about the fall in the share market share prices over the past couple of years. He asks you that he gives you a task to improve the profits, and then he also shares with you the financial statements. So the financial statements are basically based on your income statement and the balance sheet. He asks you to submit a plan to arrest the fall in stock prices as soon as possible and turn around the financial performance of the organization. So what do? In any case study, irrespective of whether it's an operations supply chain case study or a marketing strategy case study or a financial case study, the first thing that you do is identify where the gaps are. And to identify the gaps, you need to measure the performance of the organization. Hence, we go to the structure of how a case study needs to be analyzed. You measure the performance, you analyze where the gaps are, and you propose improvements so that the organization can turn around the performance. In this particular case, if we look at the various numbers, there are three metrics that we would like to look at. For some of you who are from business backgrounds, you would be familiar with these metrics. For the others, I will just take you through what each of these metrics mean. So the first thing that we focus on is the EBITDA percentage. The EBITDA percentage is a measure of the profitability of an organization. The return on assets is a measure of the efficiency of an organization, and the inventory turns is a measure of how well your cash is being circulated within the organization, or in other words, we call it the performance of working capital. These three critical elements are used by traders and analysts on a daily basis to analyze and understand the performance of an organization. How do we calculate the EBITDA? It's a simple ratio of the net profit to the overall sales. And if we go back to the previous slide, you will realize that for each of the years of 2014, 15 and 16, if you divide the operating profit to the revenue of each year, you will be arriving at the numbers of 9.5, 20 and 26.3. The return on assets, it's a ratio of the net assets to the net sales, and like the EBITDA percentage, if you go back to the previous slide and if you divide the total assets to the revenue, you will get the figures of 14, 27 and 31. Bear in mind that these are all in percentages, and hence when you calculate the ratio, you will get a figure of 0.14, 0.27 and 0.31. The inventory turns is a measure of how well our working capital is being utilized, and hence it is calculated as a ratio of the inventory to the cost of goods sold. So if you divide the inventory to the cost of goods sold, you will get a ratio of 3.2, 3.63, 3.5. There are other various definitions of inventory turns, but for the purpose of this case study, we will use the above mentioned definition. Once we have measured the performance of the organization in terms of the three critical metrics, which is the EBITDA percentage, the return on assets, and the inventory turns, we would now try to analyze where the gaps are. As you can see, the profitability of the firm has been decreasing significantly from 2014 to 2016, right from 26.3 to 9.5. This means that there is something wrong in the overall expenses of the organization. The return on assets is a measure, as I mentioned earlier, is a measure of the efficiency of an organization. Essentially, it tells you how good you are utilizing your assets to turn out profits. As you can see in the table, the return on assets also decreases significantly from 31 all the way till 14. This implies that our assets in terms of plants or other fixed assets that we have are not performing to their required efficiency levels. The third measure of inventory turns tells us how quickly are we able to churn our inventory so that we realize our sales. The higher the number, the leaner the organization. Hence, if we see that the inventory turns is reducing from 3.5 to 3.2, it means that we are storing a larger amount of working capital to realize the same amount of sales, which is, as a no-brainer, is not the best of financial performances. So once we have measured and analyzed the performance of the organization, we can then figure out what are the ways in which we can improve the performance of the organization. So let's take the EBITDA. The EBITDA, as we said, is a measure of the profitability of the organization. What is the profitability? It's the difference between the revenue and the cost of goods sold. For the purpose of this case study, we are not going to look at the revenue part because it's purely a function of the price and the number of units sold, which will be determined either by the market or by the market share that you command in the particular segment. But we will focus more on the cost of goods sold, because if you remember the initial slides, a supply chain is more to do with how to deliver the products to the customer, and hence it helps to reduce the cost across the supply chain. Looking at the cost of goods sold, there are three elements: the sales and distribution cost, the manufacturing cost, and the cost of supplies. If we go back to the initial elements of a supply chain, you can correlate each of these cost elements to one element of the supply chain process. The sales and distribution cost will relate to the delivered process. The manufacturing cost will relate to the make process, and the cost of supplies will relate to the source process. As we mentioned earlier, planning and execution are enablers that help to tie and perform the supply chain together. In terms of proposing improvements to the organization, let's start with the sales and distribution cost. The sales and distribution cost, as you can see, has gone up significantly from 2014 to 2016. What could be the reasons that the distribution cost has gone up? Is it that the manpower required to deliver the products charge more salaries these days? Or is it that the route in which I go to the market is more complicated, hence it requires a larger amount of expense? Or is it that the products that are delivered to the customers are in small quantities, and obviously if we deliver in smaller quantities, the expenses go up? There could be many ways, and when we go to the next slide, we will see what are the improvement opportunities. In terms of the manufacturing cost, we will see that there has been a drastic increase from 14 to 2016. And this underlines the fact that the return on assets has reduced from 31 to 14. This could potentially indicate to severe problems in manufacturing, which is the core of any supply chain process. It could also indicate that some of the other assets are not performing as per the expectations. The cost of supplies has remained stagnant over the years, which is a great sign because even even without considering the other aspects of the business and only focusing on the inflation perspective of an economy, having the same cost of supplies across the years is a great signal that the procurement or the sourcing arm of the organization is performing quite well. Now that we have approached the problem, we will try to look at what are the things that could have caused in problems in the organization. So as we said, the sourcing cost has remained stagnant over the years, and hence there it is a good sign that the procurement function is performing well. The manufacturing cost, as we said, there is a significant reduction in the return on assets, and hence are the plants running to their capacity? Have the products been sequenced correctly? Have the right cost elements been identified? These are all the parameters that help us identify what the issues can be. In terms of the distribution cost, like I mentioned earlier, it's very important to have the products planned in appropriate channels and whether the route to market has been set up correctly and due diligence has been performed. And then in terms of the customer service requirements, which is so critical these days, if you take a delivery from Amazon Prime, they will deliver you probably within a day. And if you need to react to such levels of customer service of 1 day or 20 or 12 hours or 2 hours, then you need to look at what are the cost implications. In terms of the execution aspects, what are the natural disasters, if any, that has impacted the manufacturing operations? Quite some time back, we had a huge tsunami in Japan, and it impacted the automotive industry like nothing else. So it is very important to have an overview of such natural disasters to analyze the increase in the manufacturing costs or a corresponding decrease in the return on assets. The other aspects that you might want to consider are there any new equipment installations? Why are new equipment installations important? Because as soon as you purchase a new asset, it increases your depreciation value, and that increases the overall cost of manufacturing. Similarly, in terms of a distribution cost, what are we delivering consistently on time, or are the variance significant? This is important because a variance from the original plan will lead to severe cost overruns, which is not only true for a delivery process in a supply chain organization, but also for any infrastructure related projects. Once we have put our thoughts together to identify the issues that impact the supply chain, there are some recommendations that we can propose. For manufacturing, we can look at allocating the products to the plants in an appropriate way. We can look at a synchronized changeover of products. So what does a synchronized changeover of products mean? Every time there is a product change, let's say from a 5-liter bottle to a 1-liter bottle, there are various setups that need to be changed in a manufacturing organization, and hence the organization should always aim to minimize such changeovers. This not only reduces the downtime, but it also improves the efficiency and the throughput of the organization, thereby bringing down the profits. The third element is in terms of the accurate cost elements. Too often in corporate organizations, we see that the cost elements are not synchronized across regions, and this is especially true for global organizations. Hence, it is very important that the elements that constitute either the fixed cost or the variable cost, or if we want to look at it from a direct or indirect perspective, are clearly identified and earmarked. In terms of the execution, it is imperative that manufacturing runs to minimum downtime, and hence there should be an improved efficiency of operations. There should be risk mitigation plans in place. We should not be experiencing supply blackouts just because there was an earthquake or any other natural disaster. In saying so, what we mean is that any organization should look at having a backup facility that can manufacture and distribute the products to the customers. In terms of the distribution, What is important is assigning products to the optimal sales channels. There is no point in having a product in a sales channel, for example, a traditional retail, wherein products move slowly compared to an electronic or an e-commerce channel, wherein the turnover of products is much higher. So correct allocation of products to channels is extremely important to reduce the distribution cost. The other important perspective is in terms of the trade-off of cost and service level. If we want to deliver products in 2 hours, or if we want to deliver in 7 days, the cost aspects are very different. And hence, it's very important that while planning the distribution and also executing the distribution activities, we look at what is the appropriate trade-off of cost and service level. I think that was a brief overview of the case study that I had. And I had some initial questions that were shared to me by the FutureLab team. And I will go through those questions, but I will take a quick pause here and see if we have any further questions that have flown in. Okay, so we'll start with the initial questions. Is there an alternative to supply chain? I think this is a very interesting question, but without doing a crystal ball glazing, what I would like to say is in the near future, there does not seem to be an alternative to supply chain. The reason why I say so is because as long as we consume goods and there are goods and services that need to be delivered to a customer, we need a supply chain. Even if we have an era of 3D printing where you can print your goods probably at your desk, but you still need the supplies to print it and you still need a printer to be assembled to do the job. And that is exactly where supply chain will come into place. So in the near future, maybe the next 15 to 20 years, it's very difficult to imagine a life without supply chain. Definitely, there will be improvements to the way supply chain is conducted. What with AI and robotics coming in, all the mundane and the regular repetitive jobs will be taken over. But the concept of a supply chain, which is to link from the suppliers all the way to the customers, still remain. The next question that I had was supply chain might not be known to non-business degree graduates. Do you think students from other courses should have some basic knowledge? I think this question is interesting in the event that for not only for IT or accounting students, but I think in today's world where the economy is moving towards a knowledge economy, it's very important to have an overview of or a basic understanding of almost all aspects. So if you wish to join any organization, it is good to know the basics of the fundamental pillars, which is sales and marketing, finance and accounting, information technology, supply chain, and a little bit of human resources and legal. Unless and until you have the whole overview or the broad knowledge of how the organization works, surviving in the knowledge economy will be a challenge. So I think it really helps for people to kind of get that overview, and we can always bank on platforms like FutureLab where you can reach out to mentors and seek their support if you find that there are some things that you do not understand or things that are vague or ambiguous. In terms of how can universities adapt this to prepare non-business students, I think this calls for a greater degree of interaction between the university and the corporate environment, wherein very often we find that university syllabi are made not in conjunction with what the corporates want, and hence there is a big disconnect between what is churned out by the universities and what the corporates actually want. So I think this goes back to the interaction between the universities and the corporates. But going back to the fundamental question, I think students should prepare themselves over a broad range of areas, at least at a basic level. How can supply chain be implemented in medium and small scale enterprises? This is a very interesting question. And I think this goes back to a fundamental thing of the awareness of what a supply chain can do, and the value that a supply chain delivers to an organization. So if we look at the journey that supply chain has gone through over the years, then the larger organizations or the big MNCs have adapted to this concept pretty early, and they have seen that the supply chain demonstrates value to the organization in terms of reducing the costs and improving the efficiency of the organization. It's no different for a medium and a small scale enterprise, and it boils down to the belief that an integrated way of working across all parties is essential and critical to increasing the value of the organization. Hence, if we look at the pillars of a supply chain and the enablers, there needs to be a planning process that spans all the way from delivery to the customer to sourcing of goods, coupled with an execution process that flows in the reverse direction from the getting the material from the supplier to ensuring that it reaches the customer on time. There are structured ways in which a supply chain can be implemented, and once the MSMEs come on board and adapt to this idea, they will find that it is beneficial to implement the concept of a supply chain in the medium and small scale enterprises. With the current dynamic economic and global environment, how do we trade off cost versus operational efficiency? This question is relevant not only in terms of supply chain, but it's relevant in every day of our life. So if we want to go from point A to point B, we can either take probably a flight, or we can take probably a bus, let's say from KL to Singapore. And there's always a trade-off between cost and efficiency, wherein the efficiency is measured in terms of the time to deliver to the customers. And this is a perennial question that all supply chain managers or all business managers face, is how to balance the cost versus operational efficiency. And it really boils down to the business strategy that your firm has, because you might be a growing firm and you want to capture more market share. In such a scenario, your focus may not be on cost reduction, but it may be on gaining market share, and hence providing goods at a lower cost base to the organization, to the customers, even though you're not making profits. When you are a more mature organization and you have a large share of the market, you need to make profits and give back to the shareholders, and that is where you begin focusing on the operational efficiency aspects, and try to figure out ways to make your supply chain lean and efficient. What's the main thing we should focus on when it comes to building a lean supply chain? So building from the previous point, a lean supply chain is essentially a supply chain wherein there is minimal waste. Saying that there will be no waste in the supply chain is an utopia, and it will be a very difficult thing to achieve. But what we really need to do is identify what are the activities that exist in the retail company, do a complete value stream map, and a value stream map essentially moves all the way back from the customer to the supplier, identifies what are the activities which are done, what is the time it takes for each activity, and if there is a cost associated. The next activity is to identify which of these are non-value adding or possibly waste activities. The final step would be to identify ways to cut the slab from the organization, and hence to remove the activities that have been earmarked as either non-value adding or waste. So there is no clear answer as to what should be the main thing, but there is a clear structure as to how to approach the problem so that you can identify the main thing and therefore go on to reduce the waste in the supply chain. I think those were the questions that I had from the team, and thank you for your time for joining this webinar. Okay. You can connect me over FutureLab. Thank you.